Hi, everybody. I'm Diane Brady. I'm here with Ron Shaich, who is the founder, former chairman and CEO of Panera Bread, Obon Pen. What's the other brand? You've created 3 iconic brands.
Kava. I've not created it, but I've certainly been a part. No, I haven't created Kava.
But you're the lead investor and current chairman.
Yes,
of Kava, and through Act 3 Holdings, you're investing in a number of different properties. And of course, you're the author of, we have the book displayed right there, Know What Matters, Lessons from a Life of Transformation. Good to see you.
Good to see you, Diane.
So I want to go back to Act 1, because I find it fascinating. Mm-hmm. You were at Clark University in Worcester.
Yes.
And you were kicked out of a convenience store for allegedly shoplifting, and that was how you got your start. Talk about that.
Well, ironically, I ended up on the board of that company a decade later. But literally, I was political. I wanted to change the world. And I was treasurer of the student body. We came back from that experience and said, the heck with these guys. Let's create our own nonprofit convenience store. We taxed the student body. We raised the money. And there was no one to open the store. And I took a summer, I built the store, I ended up staying in Worcester, and when it came time to run the store, I took on the role of manager. And I must say, Diane, for someone who doesn't dance, for someone who doesn't sing, I discovered running this store was the most creative thing I had ever done in my life. It's live performance art.
Yeah.
And I loved it.
Well, that's the customer experience. I want to clarify before we move on. First of all, did you or did you not shoplift from that store?
I definitively did not.
You did not.
Shoplift.
So this was this Schadenfreude, like in a way, or what's the right term? Revenge. What made you decide I want to set up a store across the street from these guys who kicked me out?
Quite honestly, it gets to the thesis of the book. Find where there are opportunities, where there are needs. It was very clear that these folks at Store 24 were not serving us. They were coming from a very different...
They were vilifying you.
They were vilifying us, and they actually were abusing us. And I came back and said, there's a powerful need. We don't need them. We could do this on our own.
I think of you in the same sort of breath as a Colonel Sanders or a Ray Kroc. You've been a pioneer.
They're all dead, Diane.
No, in the same breath, I said,
Yes.
Here's why. Nothing to do with your health, but much more to do with you were a pioneer in the whole fast casual space. What was the aha moment for you with Panera?
Well, there were several aha moments, but the aha moment that really led to the founding or the creation of fast casual was a 2-year was an aha moment coming in 2 years of listening tours and being out in the marketplace and hearing. And what became clear to me is the alternatives at that time were fine dining and fast food. And 1 out of 3 consumers, you could see it in their faces, you could watch it in their eyes. They'd walk into fast food and they would almost be embarrassed. They didn't feel good about it.
You feel unhealthy just looking at the menu?
Oh, and they actually felt diminished, depleted. They'd walk in and see tables that were bolted to the floor. They'd see employees with paper hats on that were really extensions of the cash register. And it was very clear that there were some group of consumers that wanted something more. And we began to imagine that if we gave them real food, environments that engaged them, if we served the food through associates that actually cared, we were able to change the currencies. The currencies of fast food were a lot of food for not a lot of money. Mm-hmm. The currencies we imagined were giving people a sense of their own self-esteem, something they felt better about experiencing for a bit more money. And what's very interesting, Diane, and one of the things I argue for in the book is really to search for what are the deeper trends, separate the wheat from the chaff, to separate the signal from the noise. And the deeper trend we saw was a multi-decade trend. It was a drive for specialness. Post-World War II, all consumer products were local. All of that morphed into these oligopoly industries, coffee, Folgers and Maxwell House, beer, Anheuser-Busch and Miller, Coke and Pepsi. And by the early 90s, in every major consumer category, people wanted to feel special in a world in which increasingly they were not. And you saw the development of specialty coffee, the development of specialty beer, craft beer,
Yeah.
the development of specialty beverages. And it was very clear to me there was a powerful opportunity in specialty food, food that elevated people, that was made in a way so different than what fast food was doing. And that vision is what led to, I think, an understanding of the power of fast casual. And that vision is today a $100 billion segment. And Panera, quite frankly, was built as a poster child for that understanding and that vision.
Speaking of specialty coffee, I don't know if you call him a frenemy, but Howard Schultz of Starbucks.
Yeah.
How close were you to actually potentially merging with them, being however you want to characterize it?
There were very serious discussions, and we write about it in the book, and I spent some time on it. I actually thought the deal would get done. It didn't. Things have ways of happening.
Well, when you look back, what are the lessons from that? Why didn't it happen?
I think so much in life is actually not controllable. And one of the mistakes we make in a broader way as human beings is assuming we can control everything. I think our stock was going up dramatically at that point, and I think simultaneously my sense is that Howard was about to announce that he was stepping down and handing over the reins to Kevin.
You've both stepped away and come back.
Yes, he did once more than me.
That's true.
I only came back once. He came back twice. I learned my lesson.
You know, what's interesting
Yes.
about leadership, it gets to a point almost like, if you think about on some level people want to lose weight, it's like eat less, exercise more. There's something intuitive about the tips on a 30,000-foot level, but the execution is what makes all the difference. When you think about the leaders, and you can be specific if you want, but when you feel a need to come back, what is it that is the gap? Is it the vision that's the gap, or the execution? How would you characterize where people
Well, there's a
fall
lot
apart?
buried in that.
Yes, that's multiple questions.
Right.
Shame on me.
No.
I
just want to say, it is all about the execution. It's not enough to have a better idea. Hopefully, your better idea is the right one. That's what knowing what matters is about. The means to that is telling the truth.
Right.
But ultimately, it's about getting it done. And the dirty little secret of corporate America is that often they get done well less than 80% of what they set out to do. It's really difficult. Now you raise a different question.
Yeah.
And excuse me, share with me that question again.
Yeah. No, I mean, I'm curious about, in the case of you and Howard Schultz and many other
Yes.
people, you pick a leader, you groom leaders, but then
Why?
you feel a need to come back.
Right. So here's how it worked for me. I stepped aside. I actually didn't know what I was going to do. I had some overtures from the Obama administration. I very much wanted to take what I'd learned about running large-scale organizations and apply them in society. And I realized at that time I couldn't step away from Panera. I was too integrated in it. And I decided to step away and jump off that high diving board and see where it took me. I will tell you that I was still the executive chairman, and I was still doing some customer-facing stuff and M&A work. And again, life takes its own path. And some period of time later, I had looked at an acquisition candidate. I came back over a weekend, and I wrote a vision, basically for how I would compete with Panera if I weren't part of Panera. And I called for digital access. I called for loyalty. I called for clean food. I called for omnichannel. And
Did you not already have all that?
None of it in 2011.
Really?
No,
Well, you certainly had clean food.
no restaurant had that.
Okay.
These were all
Green food.
clean,
Oh, clean food.
Clean food.
What is clean food?
free of all artificial colors,
Oh,
flavors,
okay.
preservatives,
Okay.
and the like. And none of that existed. And I essentially shared that with my friend Bill Morton, who I'd handed over the reins to. And Bill looked at me and said, "Ron, will you go work on this? This makes so much sense." And I said, "Sure." And a year later, the executive chairman was working 80 hours a week on this vision and loving it. And I mean, we really were one of the original technology-enabled restaurant chains. And this was in a time when nobody did it.
You know, I have to ask because it's actually my favorite restaurant was Obon Pen.
Really?
You know, I liked it better than Panera. You don't talk, you don't get as much
I'm glad
attention
there
to
were
that.
many more people who liked Panera better than Obon
I know.
Pen, because I sold Obon Pen.
Well, I know, but tell me
Yes.
about a little bit about that in terms of what need you saw in the market there.
At Obon Pen
Yeah.
or leading to Panera?
No, Obon Pen.
So if you go back to Obon Pen, when I first got involved in it, it was 3 restaurants.
Yeah.
And it was essentially on the edge of bankruptcy. And it was a croissant shop and bread, essentially. And I would work in those stores. And I would have customers walk in and say, could I have that piece of bread, that baguette? And I'd say, sure. And I'd say, would you like me to slice it for them? And they'd say, sure. And I'd start to slice it as you slice bread like this. And they'd say, no, slice it from top to bottom. And I'd grab a knife, I'd slice it from top to bottom.
You slice your hand. No, I'm kidding.
No, I sometimes did, but I'd hand them the piece of bread, and they'd pull out a bag from Stop and Shop or the equivalent, and they'd put on some roast beef and boursin. And if you're listening, you don't need a Harvard MBA to figure out maybe the opportunity is in sandwiches, not in selling the bread. And we converted to a bakery cafe. We opened a store in Boston in Copley Place. There was a bakery cafe, and this bankrupt company took off like you couldn't imagine. And it essentially took us to a public offering of Obon Pen. It was an amazing, amazing experience to think of it differently, to learn and understand differently what Obon Pen could be, that the bread and croissant were really the platform.
Not many companies go public these days. I mean, in fact, I think the number of private equity-backed companies exceeds public companies by 2x, 3x. Does that make sense to you? I mean, it feels like we're losing something by not doing more IPOs. I mean, give me a sense of, if you were in this market right now, would you be heading toward an IPO? Well, here you are. You've got several
just took
companies.
Kava.
Yeah, that's what I'm saying. What is the value of the IPO? Because it's very tempting for founders and leaders to stay private. Among other things, they don't have to talk to the likes of me.
Well, I actually think it's the opposite. I think many people still hold out the desire to go public. I also think the truth is, in my estimation, 90% of the CEOs who choose to go public end up regretting it. They're not prepared. Their company is not ready to be a public company.
For the scrutiny? What are they not prepared for?
They're not prepared for what the public market wants to pay for. So, in essence, the public markets are going to pay 6 times EBITDA for stable earnings. Anything in your multiple higher than that is about a present value growth brought back to today, right? And if you don't,
even hearing you speak, it's not as inspiring to be talking about that stuff. Is it your EBITDA? There's the way you're talking to Wall Street when you're a public company as much as you're talking to consumers.
Sure, but the important point is, when you're running a public company, your constituents expand dramatically. When you're in a private company, I've got to deal with my board. But when you're public, I've got shareholders that are trading on the next inflection point, your comp next week. I have other shareholders that are in it for 5 or 6 or 7 years. I got people that are calling on me to make long-term transformative changes. I have other people that will jump on my back, activists, and attack me if I do anything that's an investment. You're pushed and pulled in many ways, and so many leaders are not ready for that.
Yeah.
So many companies are not set up, and more importantly, their business isn't. Kava is a perfect public company. It's a powerful niche, Mediterranean. It could be the next major niche in the food industry, and this is the dominant brand in that category. It's got a path to the next 1,000 restaurants, and it's got a very strong CEO who's been prepped to be a public company CEO for now years. He's ready for this. His organization is ready for this. But unless you're ready for it, it can be a very unhappy experience.
Before we pivot back to you, I want to look at the world through your eyes in terms of what matters most right now. I mean, you talk about what you saw in the market back with Panera. You talked a bit about Kava. What are the trends that you are capitalizing right now in terms of the next pivot?
Well, I would say to you this. I'm going to share with you and your listeners in the next 30 seconds 200 years of food service history and where it's going.
In a haiku or how? Okay.
Well, we're going to go a little more than a haiku, but we're going to, you give me a minute. If you go back, to 200 years, if you and I wanted to go into the restaurant business, we'd open an independent restaurant. Our spouses would either be in the front or back, and we'd be in the other position. And that's what every restaurant was up until the 1950s. And the 1950s saw a turning of the retail wheel in food service. People began to say, I want to create a niche of that independent restaurant. I'm going to take one product, pizza. I'm going to take chicken. I'm going to take hamburgers. I can industrialize it, advertise it, mass produce it. I can do something special. That was the advent of fast food.
Sure.
Fast food was a niche of an independent restaurants. When it first formed, it was special. By 1990, it was 60,000 self-service gasoline stations for the human body.
Yeah.
That's all it was, drive-thrus. And it had become, at that point, a multi-$100 billion niche of the $300 billion independent restaurant business. Well, wait till by 1990, guys like me came along. I came along and said, you know what? Right? People now are ready for something that's a niche of fast food. That was the evolution of fast casual.
Yeah.
Fast casual is a $100 billion niche today of the fast food industry, which is hundreds of billions of dollars, which is a niche of independent restaurants. Where it's going now, as fast casual is built out, you're going to see specialists competing in niches of fast casual. You see it in every major category, from Mexican to Italian to pizza. You see it in coffee, and you're seeing third wave players who can bring a higher level of expertise and craft to that process. So where I'm putting my money as an investor, my own money, is in these significant niches like Cava, like Mediterranean with Cava, and then helping build the dominant brand in that niche.
Yeah, and you've got other brands. Is it Tate? Is that how you say it?
Tate.
Forgive me. So you've got 4 brands at this point.
And we've got 3 public companies that we do advisory work
Okay.
with.
Let me ask you about politics. You mentioned it earlier, the invitation to join the Obama administration. You were very interested in politics and business when you were younger. You were one of the co-founders, I guess you call it, of No Labels, right?
Yes.
Talk a little bit about the genesis of that, the need that you saw and the role you wanted to play.
This goes back a decade ago, and my goodness, right? I ask you a simple question. We compete with the Chinese with 20-year plans. How in God's name can we compete if we can't agree on a budget for 20 weeks? It's a guarantee.
Can't agree on a speaker to get that budget to come forward.
You can't agree on a leader. How does it happen? So it's very clear we're misserving ourselves. And it's very clear that the key that I write about in this book is long-term thinking, is having a long-term plan, knowing what's going to matter and getting it done. Our government is not doing that. And it didn't take a brain scientist 10 years ago to say maybe there was a better way, and to begin to look at the structural problems in our country that have created the very real hyperpolarization that we see. I believe 365 of our 465 congressional districts were red or blue in the last presidential election, 60% or greater. The result of that, very simple, that the election occurs in the primary, not the general election. So you get much more polarized candidates running in the primaries. Something's got to give. We're not serving ourselves. The way in which we're operating our government is not leading to the best decisions. And so I would argue we have got to do a better job of bringing people together. We've got to change structurally where we need to change to allow democracy to occur. And we've got to figure out how to talk to each other, to listen to each other with empathy, and to bring this country together.
Would you ever run yourself? You talked to Howard Schultz about that and he says, don't do it.
Well, he would say that. No, he's had that experience. I gave some thought to it. I ultimately, listen, I got into this to make a difference, but I really came to conclude that the most powerful way I could make a difference was in the organizations I was involved in running. It touched people all over this country. It touched hundreds of thousands of team members. I still get hundreds, if not thousands, of letters a year from people thanking me. Hey, you fired me, Ron, but I learned more working for you.
Yeah, I once got flowers from somebody I fired. It's how you fire them, right?
Well,
it's not
it's
you,
actually,
it's you and the job.
Yes, and it's what they learned along the way.
Yeah.
And that to me is actually, where the impact comes from and the joy.
So to distill life lessons, again, it's people should buy the book. This is teaser content, if anything. Let's talk to fellow leaders, because I know a lot of people ask you if you're starting out, what would you do? What about your peers right now who are trying to manage in this environment that inspired you to start No Labels, which you said, by the way, I would be asking you much more about that, but you don't speak for them, of course. What would you be telling fellow CEOs in terms of how to navigate successfully in this climate? Any particular advice?
Well, I would say it in any climate, which is trust yourself. Trust your inclinations. Don't do what you think you should do. Do what you think is the right thing to do. And I would also argue strongly, which is what I argue in this book. And this book is every bit as much about my story, but even more about the lessons you can extract about how do you build an entrepreneurial life, and how do you run a large organization. And what I would say to those leaders is to figure out what 2 or 3 or 4 things 3 years from now, 5 years from now, 7 years from now, you're going to look back and say really mattered that I got done. And then commit yourself and your organization to getting it done. Build your calendar. Build your team around just that focus. And all too often, too many leaders are in a reactive mode. Their calendars are in reaction to what they think they need to be doing, not what they really have committed to do. And oftentimes, we get off of our intent and our purpose.
Let me ask one other question, because I feel I'd be remiss not to do it.
Yeah.
Since Forbes, a lot of it's, a lot of people watch this because they care about success, entrepreneurial success and otherwise. The cycle of success for you, there's a period where you don't have a lot of money, then you have a lot of money. Did that shift your mindset around success
You
when
mean
you start?
me personally?
You personally, when you started to realize, you know what, I don't actually probably ever need to work again. I'm just...
It didn't. And I mean, why am I still doing this? All right, it's the closing chapter. Why am I still driving transformations? Why am I now involved in half a dozen organizations? Because I actually love the doing of the doing.
Yeah.
I love figuring it out. The part that I am most excited by, the thing that gives me the most satisfaction, is not that we had the best performing restaurant stock of the last 20 years, not that we delivered 25% annualized returns over those 2 decades. What I care about is what I learned. What I learned as we spoke about around the opportunity to take a bakery to a bakery cafe. What I learned about creating fast casual that led to Panera. What I learned about myself when I made the decision to sell all these other assets and bet it on Panera. What I learned about myself when I went back to Panera and tried to transform that yet again. One of the things that I write about in this book, and I don't think it exists in most books of this genre, is I wanted to really write about the pain, about the reality of what it took from inside to go through all this. So many of these books.
Did it feel like a failure to go back?
No, it's the opposite. It's a sense of getting up in front of an audience of 5,000 people and giving a speech and saying, we're going that way, and knowing that you're not quite sure, you really don't know, is that really right? It's the sense of I'll never forget it, getting out on Starro Drive in the middle of this massive transformation. Activists are attacking me. And I know we got the right stuff, but I'm sitting there thinking, I got $5 or $6 billion of investor capital betting with me. I've got 125,000 employees with me. I got all these vendors and communities that are believing me. My God, I better be right here. I better not get this wrong.
Yep.
And it's that sense of responsibility sitting on your shoulders. And you just sit and go, boy, it would just be easier. I can't screw this up. And I used to think to myself, I used to think of something Vince Lombardi, I believe, is quoted as saying. He never lost a game. He ran out of time. And what I always feared is I'd not have enough time to make the transformations that I knew were the right things to get this organization where it needed to be. But the reality is we rarely talk about this. And I talk about what it felt like in the 90s when I wasn't winning.
Yeah.
And people were saying to me I was washed up. I talk about what it was like to go through transformation when bonuses were down, people were despondent, investors were beating on me. And I wondered, my God, how much of this can I sustain?
Well, you have a lot of responsibility on your shoulders, but I have to say, Ron, you wear it well. So
Thank
the
you.
book is
But I ended up with no hair.
what matters most. Well, but here you are.
Yes.
Still doing. So thanks very much for joining us, and I look forward to continuing the conversation.
Thank you, Diane.